Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over ratios and market conditions for a commodity bull market. So let's take a look at what's out there for commodities. We'll take a quick look at most of these different sectors, and I'll give you my financial opinion. So let's just dive right in. I've got the CRB index up here. We've got the consolidation period from 08 to 2020. This is your recession coming from the real estate market. That's what it looks like for a big drop. Then we go into a consolidation period of an unfavorable low inflation, low interest rate environment. That's where the housing starts in recovery phase. And then we break out into an expansionary phase where it's more inflationary, liquidity driven. And I also think that we've got a commodity bull market from looking at the market balances of supply demand imbalances coming on the right hand side here. So we could see a big commodity bull market out of this. Coming down to gold, just to kind of go over all these from a big picture view, gold's looking good. It's a bullish piercing pattern that's developing, and maybe we could head higher here. Saying, hey, look, inflation is still in the mix. Silver is also right at support. To me, this looks fine. We've broken out of this downtrend, and we've just been consolidating sideways. We're waiting for a direction. Looking at platinum, platinum also looks really good. We've got the traits of a consolidation period. We've broken to the upside. We are consolidating and creating another pattern in a falling wedge type look so we can break and move to the upside. So platinum, I think, looks really good for a physical metal. Scrolling on down, crude oil. Crude oil is looking fantastic. Get this thing out of here. Oops. Crude oil has been moving higher. It's got a lot of momentum behind it. We've broken out of this pattern to the short term to the upside. To me, it looks pretty good. Natural gas has also been on fire. We've got the break here, and it's just been rocketing on up. We've got a little bit of basically a ascending wedge. Sometimes that can be bearish where we break to the downside and consolidate for a little bit. Sometimes they're ultra bullish if we break to the upside. Again, we'll find out where this thing breaks. I think we'll break to the upside coming, in the winter or something like that. Maybe even the summer. Because keep in mind that renewables, they don't generate power 24/7, so they use natural gas to make up for the difference. If we're going to have rolling blackouts, it probably means we're going to have a shortage of natural gas at some point, or we're going to be running those natural gas power plants quite hard, put it that way. Demand will be high. Coming on down, looking at the uranium, 51 bucks on uranium. It's been moving up this past week. That one looks good. Scrolling down, let's look at some of the ratios here. Of course, I probably blew right past the ratios. There we go. CRB to S&P 500 still looks fantastic. Very strong outperformance by commodities in relationship to the S&P 500. You zoom in on the dailies, we are breaking higher on this ratio. This ratio has been a monster run. We continue to move on higher. Looking at platinum to gold ratio, we had a little bit of a pullback in the platinum to gold ratio. Again, it's still above its pattern here, still looks good, and I prefer platinum. Platinum to palladium ratio had a little bit of a pullback past 2 days. Again, I still like platinum, as platinum is ultra cheap in relationship to palladium, saying that there's good value there. And then platinum to silver, we are trying to break out. We've broken out. We're doing some retest type movements with the platinum to silver ratio, and this is a falling wedge, which looks really good for a potential breakout of platinum to silver. Now, does that mean it will necessarily outperform silver by meeting this? Maybe, maybe not. I mean, just because you have the setup doesn't mean it will manifest and come all the way back to the top here. Maybe it will, maybe it won't. But knowing where it's at and how cheap it is, I'll put some money in it. It's one of the cheapest assets. Doesn't mean it has the most potential. It's just meaning it's one of the cheapest. We've got gold to silver. Gold to silver, again, is right at this resistance area. Right, that line going across is strong resistance there. I do think this will eventually work its way lower when we get into the bull market for precious metals. Seems like we haven't taken off yet. I do think silver will outperform gold. Palladium to silver. Silver, I think, will outperform palladium. Platinum will outperform palladium. Palladium is the one that I don't think will do as well. Again, that's just my opinion, but we are high in the ratio versus all the other metals. Dow Jones Industrial Average to gold. Looks like we've got a monster down day. Wow, it's a monster down day there. So that's that large down week, down month, I should say. Go to the dailies. We had some pretty strong outperformance of gold in relationship to the Dow Jones Industrial Average. Looks like we've got a little pattern here. You can kind of put that there and there. Put that in the middle. We'll see if this breaks to the downside. If it breaks to the downside, gold is game on. Gold is game on when we break this pattern here. Looking at the gold to oil ratio, gold outperformed oil the past 2 sessions, but we're at an average ratio, 15 to 1. So that's 1 ounce of gold can buy 15 barrels of oil. And that's average throughout time. This is an anomaly all up here. That is ridiculously cheap. But yeah, 15 to 1. Last bull market, we got down to like 6 to 1. So there's still good compression that can happen in gold, in oil against gold. So there's still good value there. But the value runway has been eaten up some. This is the copper to gold ratio. Zooming in, we had a strong outperformance of gold. It's back at that support zone. We'll see if that support zone holds or if we break out to the downside. Copper to gold ratio usually follows or leads interest rates, the 10-year interest rate. Looking at uranium to silver, uranium looks really good to outperform silver and move on up. Uranium looks like it wants to outperform absolutely everything on a ratio perspective. This looks really good on large up months, small down months. This looks good to rocket higher. Uranium to S&P 500 looks like it wants to move on up. That looks good. Uranium to gold, that looks good to move higher. We just got to get a little bit more momentum going. This is very cheap in relationship to gold. Uranium to crude oil, uranium's very cheap, and we could see a large outperformance of uranium at some point against oil. And then we've got uranium to copper, and uranium is cheap to copper. So basically, uranium's cheap to everything, and it's moving in a way that is bullish. Now we're just waiting for the buyers to step in and launch it. When will that happen? I don't necessarily know, but I am remaining long and will be buying uranium mining companies or uranium-related companies because this is a very favorable ratio. It looks good. It's performing well. And I think we'll see a big move out of uranium at some point. The Baltic Dry Index, we are at that resistance level. We broke through it in 21. We came on back. We're trying to break through it again. We've got a little bit of selling pressure happening here recently over the past week. Here's that selling pressure there. But it is cycling up and down with higher highs and higher lows. We'll see if that trend continues. Lithium has worked its way higher, had a little bit of selling pressure up here. Could we have a little consolidation period? Yeah, this has had a monster run, and it could consolidate for a little bit. Coming on down, looking at lumber. Lumber's been selling off. We are coming down to that lower trend line that I drew a long time ago, and we'll see where this goes. Maybe we head lower. That would be great for home builders and for people buying homes. So this pressure is being released from the housing market. Higher interest rates, lower lumber prices, maybe it'll all equal out in the end on new home builds, getting a little bit cheaper. Nickel, we've got nickel going sideways. This market almost looks like it's broken. But we'll see where this heads in the future. Let me get this out of here. I know JP Morgan said, we'll come in here and control and manipulate the market. Palladium priced in dollars, heading a little bit lower there. We've got cocoa futures. Zoom out. We're just kind of squeezing up here on the right-hand side. Wheat has gone pretty vertical here. We do have a lot of wicks at the top, up at the top there on the monthlies. So we're just kind of bouncing off resistance up here. Looking at soybeans, we're pretty, this is very high. It looks like we're just consolidating at a high level. Corn is also consolidating at a very high level. It's just kind of bouncing off support. Looking at the housing starts are remaining high. Nothing wrong there. We are continuing in an expansionary phase, and they are still elevated. And then looking at inflation, 8.3, that's going to be up at 8.6. Of course, I just threw a trend line on this, and we'll see where this thing goes. But yeah, inflation rate was 8.6. There it is. And we're right above that line there. And we'll see if it goes higher or lower. I think if energy remains robust, that this number will continue to go up if energy goes up. We've got aluminum. Aluminum has pulled on back some. We'll see it here once it updates or refreshes. There's aluminum. It's been pulling back a little bit. I do think that this is a breakout, a retest, and then a launch higher will happen soon. 2023 is probably the year it starts to ramp up. 2024 is when inventories get really, really tight. So we'll see what happens here. That's aluminum. And it looks like we've got a, if I were to kind of draw something in here, kind of like a wedge type pattern that's developed. Something like that. And we'll probably break down and maybe we'll come back. We'll see. We'll see what happens there. And then we already looked at the Baltic Dry Index. So that's what we've got for market conditions and ratios for the overall market. Uranium looks the best to me out of all of them in terms of ratios, and platinum looks the best. Those two. Uranium has the most leverage of any commodity to the commodity bull market based off of previous ratios and its compression against other assets. So uranium, I think, has the highest potential in the mix, and platinum has the most undervalued ratios in terms of based off history, just the overall valuations of where they are today in relationship to history. They just don't have the most compression of the ratio. All right, guys, that's all I've got. Give me a thumbs up. Subscribe to the channel. Subscribe to the website, the Platinum membership. I have a lot of this stuff on there as well. And we'll catch you next time. This is Finding Value.